Market challenges continue, as Diana also reported. Let's bring in Danielle Hale, chief economist at Realtor.com. Danielle, why don't I start by getting your reaction to that lawsuit that Diana was just reporting on? Do you have any thoughts there?
You know, I think there are a lot of legal issues at stake. As an economist, I can say that we know that affordability challenges are important for consumers right now. So I think making sure that consumers are informed and in the market with good representation, I think is really important to making what is for many the biggest decision of their lives, the biggest financial decision of their lives. So I think it's important that consumers are informed and work with professionals. Now, as far as the pricing and the legal implications of that pricing, I'm going to leave that to the lawyers to talk about.
Well, the transparency, it seems to me, it's been an opaque process of who pays whom, who's really paying for it. I don't mean to get into this deeply because I'm not really skilled enough to talk it through, but there is a lot of opacity, shall I say, to use a SAT word, in that thing. But let's talk about the market dynamics a little bit more. It would seem what Diana said would be true, that in the existing home market, prices have remained relatively stable despite rising interest rates. And the reason is because supply is so low. And so that means you would have low supply and demand, which is stable or rising. So that means people are willing to pay more for those low supply homes, right?
Yeah, so that's consistent with our data. We do see that the number of homes on the market has declined, the third month of decrease in our September data. And if you look at where we are compared to 4 years ago, before the pandemic, there are more than 40% fewer homes on the market today. So put another way, for every 5 homes that would have been on the market 4 years ago, today's buyers are seeing just 3. And so even if there aren't as many buyers as there were in that pre-pandemic period, and we know that there likely are not, given what's happening with home sales and at long-term lows, we can see that the market is relatively competitive and pricing really hasn't budged a ton. Those Case-Shiller numbers that Diana reported on, as she mentioned, are 3-month averages with the most recent data coming into August. Pricing has softened a bit, according to our numbers. The median listing price was up just 0.4% in September. So a little bit more softening, but a surprising amount of resilience given how much costs have gone up and how challenging it is for buyers in this market today.
I was just going to say that, Danielle. There were some stats that were sent out here by our data team. The 30-year fixed rate mortgage as of March 11th, 2022 is 4.29%. And as of this week, it's 7.88%. But the prices of homes are not coming down to equalize for that. I mean, why is that? Is that simply because the inventory is so tight and that's making the price so resilient?
Yeah, right now, limited inventory is one of the biggest drivers. I think, when mortgage rates first started going up, you also had home prices that were already high. And so you had a lot of existing homeowners that could sell and maybe make a move using a lot of the equity that they'd built up in their homes. So that was an early driver as rates started to rise. But now we know that a lot of existing homeowners are choosing instead to stay put. They are not putting their homes on the market. We continue to see the number of new listings on the market come down from a year ago. And this is on top of low levels that we've seen, the lowest levels that we've seen essentially ever in our data. So existing homeowners are choosing not to list their homes for sale. That's driving the number of homes on the market down low. And it's raising the importance of new construction and newly built homes in the market. Our analysis at Realtor.com shows that the number of new homes on the market is roughly about 30% of the market, compared to about 15% historically. So when people are out there shopping, they have a lot more new options to choose from than they have historically. And at the same time, builders are willing to buy down mortgage rates to help home buyers, find homes that meet their budget. So that can be a really good option for home shoppers who are out there right now. If they're in an area where new construction exists, builders have been a little bit more flexible. And we see that reflected in the sales data. As existing home sales have declined, new home sales have actually fared somewhat better.